Good evening everyone, this is Srikanth Rajan and welcome back to Market Pulse video where we discuss about what's happening in the market and what could be expected in the market in the next week. So talking about the market last week, the entire focus of course was on two things. One was of course the results from the major IT sector and two was the Israel and Palestinian war. So talking about the IT results first, of course, we did see TCS coming out with results, and we could also see that Infosys and HCL also came with results. But one common thing among all three of them was that all the three have given a decent result in spite of all the problems that's happening in the US. Yes, when we talk about the media does talk about the lower guidance and all that. But if you see, the major concern was only the lower guidance. But if you look at the profits have actually gone up compared to last quarter. Revenues have gone up, and also the best part is there are a lot of deal wins that have happened, which is actually making the IT strong. But then, yes, one thing that Indian IT sector as such lacks is a product of their own. So all the IT companies that we are looking at in India are all supporting the global companies by offering them their services. So as a service industry, they have been doing good and they are looking at growing in a similar manner, and that is something which I can say is a positive part. But if you talk about guidance have been very moderate, I would say. In fact, they've been very modest at giving that moderate guidance, and that is kind of helping the IT sector kind of staying flat. So if you see, last time also Infosys had given a very modest guidance, and this time they've actually outperformed their guidance. In spite of that, Infosys had a fall, but in fact, that fall was immediately bought into. So one important thing that we are looking at is IT bigwigs have somewhere found a bottom somewhere close by. That is something that I can say. In fact, HCL did actually go up after the results came, in spite of the guidance being lower because of the huge deal wins that they've had. So that is something which is kind of taking the market on a slow basis, slow mode. But I would say still IT is not that bad in a situation. But if you look at other IT companies, all the IT companies have fallen because of the results. But then this is something as a part of it. They should start improving slowly. Like I've told you earlier, also investing into big companies like Infosys, TCS, HCL, Tech Mahindra, all these companies are not expected to give amazing returns, but of course they will give a decent return which is better than FD return. So for higher return you always need to go for a slightly smaller company like a mid cap or a small cap, but then of course there comes the higher risk also. So it is very important that you should decide which one to invest in based on your risk appetite and two, the fundamentals of the company. So if you look at other stocks that we're holding like Persistent Systems, Zensa Tech, and even we could say eClerks. So these are all companies, even OFSS has given amazing returns in the investment that we have done in the last 1 year at MPI Invest. So is it time to enter these stocks now? Well, you should do your due research or of course be a part of a community. Well, I am not supposed to talk about stocks, so that's something I would not be doing. But of course, I'm really happy about the kind of returns we've actually made in these companies which I spoke about. So that's how the IT sector is looking like. Now, however, one thing that's happened is with these IT results, the expectation for the entire set of IT results coming ahead has actually come down. So this week we have again Wipro results coming out this week. But this week the focus will be shifting on to something else. That is nothing but the banking sector. So HDFC Bank results were supposed to come today, but then probably due to some changes, they've actually made it to tomorrow. So we'll have to wait till tomorrow to see what's happening in HDFC Bank. But then the results are expected, I think, post market hours tomorrow. If that is the case, there can be a big move on Tuesday based on how the results come. Now, if the results come, I mean, at least the expectation of people is that results may not be great because already HDFC Bank has kind of announced that their net interest income has kind of come down slightly, but then that is okay. And people are able to digest that even if the results are kind of flattish. But if there is a good news, then that could be a surprise. So that could actually trigger the bank nifty itself. If you look at last week, the bank nifty has been kind of lagging behind compared to nifty at this point of time. So these are things that's happening on this front. So apart from HDFC Bank, also the focus would be on other banks like IndusInd Bank, Kotak, ICICI again coming. Kotak and ICICI results are coming next Saturday. So that effect can be seen the next week. So all these are something that can be expected for the upcoming week. So upcoming week, the major focus would be on the Fin Nifty and Bank Nifty, and that would kind of set the tone for the market. But however, I am expecting Indian markets to be better. But something very important is US also is having its result season now. So Bank of America, Tesla. So these are few stock again coming out with the results this week. So there will be a lot of focus in the US markets also, because US markets have already fallen down well, and a lot of volatility is expected in the upcoming week because of the results. So at this point of time, the markets are going to be volatile much higher than expected. But along with that, if we talk about the war, now the war has been priced in. Market have kind of taken it lightly, because markets have actually rallied up in spite of that big fall due to the war. But then there are chances of a gap up or a gap down in one of these days based on the news coming in from that side. So unless there are some major changes happening there, markets are going to kind of being stable. But if there are some major changes, that could throw surprises to the market. But that is all short term, I would say. Any day that we see a market sell off, I would actually look at buying and adding some stocks. In fact, my SIPs have been going really well. I am really happy about it. In fact, we have been doing SIP into small case, we've been doing SIP into mutual funds, and also some bit of SIP goes quarterly into SGB. So overall, our portfolio is actually looking good for now. In fact, this I was just looking at my portfolio for this financial year. We are actually sitting with some decent returns, both on the stock front as well as the trading front. So that is something really good about this quarter. So even though we've had multiple things coming in, this is kind of taken care of, our portfolio is kind of done well and kind of taking care of how things are. So if you remember, the last financial year I had spoken about how my US investment had supported the market. In fact, my not market, my portfolio. But this time my US investments have actually come down because of all these problems in the US market. But that's completely okay. So that's kind of, we have been doing a different way of investment into US now via a mutual fund, and that has been kind of doing decent at this point of time. So keep the SIPs going. That's something really important, because India as a country is going to see a lot of fund flow coming in. And if you see the entire week, the FIs have continued to sell, though on Friday it was not big, but then other days they've actually sold big. And the only reason the market is actually kind of stable is because of the DII buying. And the DII buying is nothing but coming from mutual funds. So mutual funds are actually going higher and higher, and that is like a beautiful thing at this point of now. So investments are coming big into Indian market, majorly from the Indian retail sector only. So that is happening right now. But at this point of time, one thing you should remember: how long will the FIS continue to sell? The FIS have been continuing to sell for a really long time. They've in fact taken out more than 9,000 crores in the last 30 to 40 days. But then they are missing out on an opportunity, because Indian markets are still going higher. In fact, I am just wondering at this point of time, at any point of time that the FIs think of adding fund into Indian market. Already they're going to buy it at a higher price first thing, but then the markets are going to rally big. Now, is that going to happen until the elections are over is the big question, which of course I don't think can happen until the elections are over. So once the elections are over, once there is certainty about the government, then there can be chances of the FIs coming about big in market. But then by then, if our Indian institutions or retailers think of adding much more funds into the market, then FIs are going to have a tough time in the Indian market. So that is something that could be expected at this point of time. So it can happen the other way, that if at all FIs start adding money, the markets will go higher, and there are higher chances that the DIs start booking profit at that point of time. So that is also expected. So as of now, for now, like I've told you earlier also, Diwali is one time when people in India love doing a lot of purchases, and the markets are also expected to be in that tune of happiness, So that is something that is lacking as of now because of all these geopolitical tensions. But then, as soon as something is sorted there, we might see the Indian market rallying upwards again. But the good thing is, in spite of all these problems, where is Indian market trading? 19,750. On Friday also, we've closed at 19,751. So that is a great sign, is it not? When all of the markets across the globe are much lower, Indian market is so close to its all-time high. So this is, of course, looking great, like a dream run. But is this going to continue for long? Definitely, at least for a few years. At least, because Indian markets are seeing that huge influx of fund from retailers, which is actually taking the markets up, and this is going to continue for some more time. But then, of course, markets will be choppy, and Indian people retailers have to get used to it. That is something very important. But only thing which I am majorly concerned about is the way the markets have actually turned up to around 20,000 level and Nifty. I'm talking about each day's movement of about 1% is also huge. So we are seeing big movements in the market, which is killing a lot of traders. So traders are getting, into a tough position at this point of time. But then that's how markets are going to be henceforth, and we'll have to get used to it. So talking about the next important part for this week, like I told you, the focus would be majorly on the results that's coming up, and nothing really to talk about. In fact, the good thing is last week we had seen the inflation data coming in, and India's inflation data is much below our RBI target of 6% at 5.02%, while at US it is actually still on the higher side. So at this point of time, banks in India, industries, even industrial growth output data came in, which was really good. Indian manufacturing companies are doing really well in every sector, not just one or two sectors. I'm talking about every sector has been doing really well, and that is a great, great positivity to India. In fact, even when IMF has reduced India's GDP target, RBI has gone ahead and increased the GDP target of India. That is the positivity that we are seeing in India at this point of time. So I am really, really bullish about Indian market. Whatever small term or short term fall comes in is just an opportunity to continue to invest. In fact, at this point of time, let me tell you, we are not a stock market company. MPI Invest is a wealth management company. But at this point of time, I'm so bullish on equity sector that majority of my investment is going into equity at this point of time. Of course, I've got a lot of fund to be deployed over a phase of time, but that is going to happen in a couple of months or weeks as we go forward. So that's it for now. I think we've covered all the details for now. Let me just check if we have any questions from anyone. No. So if you have any questions, of course, you can post in the comment section. We can answer that in the next podcast. So that's it for now. Okay, talking about the last part before we end the meeting. The level for the next week. So I am expecting the markets to kind of trade between 19,500 to 20,000. But on safer side for trading, if you want to do a strangle, then a good thing would be to look at, I'm not suggesting again, I'm planning to trade between 19,300 to 20,100 myself. So that's the plan for now. Let's see how the market moves. Based on that, I would kind of get closer to the spot price and do some trades based on that. So that's it for now. This is Srikanth Rajan signing off. But before we leave, do remember to press the like button if you love the content that we share, and do share the podcast with your friends and relatives to help them learn and invest together with us. So this is Srikanth Rajan from MPI Invest, the wealth management company where we help you grow financially. Goodbye and have a great week ahead.